Welcome, everyone. This is, believe it or not, our 10th annual Market Insight event. We've been doing these for 10 years as a give back to our clients and friends. And this year is going to be an interesting one as we have some great talent joining me tonight. I am Andrew Rosen, one of the partners at Diversified, along with Dave Levy and Kyle Hill. I'd like to thank everyone that's joining us tonight remotely. This is quite 2020, as is everything else that's going on these days, but this is how we're stuck doing these events. But we didn't want to skip a year because there is a lot going on in the world with elections coming up in the markets. And we thought we could share with you some valuable insight because we know you turn to us for that and we want to provide it. So before we get started with our keynote speakers that I will moderate a discussion, let me give a couple updates on Diversified that I think are worth sharing because you are partners of us and you are part of what makes us a company, and we value that and appreciate it immensely. So I figure I'll share just 2-3 minutes of updates, and then I will introduce our speakers and I'll walk through the format of tonight, and we'll have a fun educational evening. So, all right, what's happened at Diversified over the past year and what is scheduled to happen over the next year or two? So first of all, we were very excited. We got some big industry accolades this past year. Most notably, we got recognized as one of the top 300 independent RIA firms in the country by Financial Times. There's almost 13,000 of them in the country. So we thought that's important to share and promote because it means you've chosen well, and as have we, and you're in good company, we like to think. We are continually dedicated to investing in this process and this relationship and in all of you, and we've done so by investing more into our investment team. We have a dedicated CEO and Chief Investment Officer, Mike Horwath. You've gotten to know his beautiful face from some of the videos we've shared. And we're going to keep expanding these teams in the upcoming year. We promoted Kelly Sini, who everyone loves more than me and Dave and Kyle combined, but she is going to be our client experience officer. So we are dedicated to making the experience amongst this relationship and with us at Diversified as top-notch and first class as we can be. So we thought it was important enough to promote Kelly to that role. We are continually researching and investing in concepts and ideas to drive value in all relationships of your life. So we've been spending a lot of time in this everything you need concept, and we'll continually do so and allow you to have the maximum benefit in this partnership. And hopefully you've noticed we've really stepped up our client communications and education series. Tonight's a great example. We feel very passionate about the fact that being a partner with us, we owe it to you to keep you informed, to stay front of mind, to have a really robust information and communication schedule that is, quite frankly, one of the tops in the industry, and we're dedicated to increasing that. You'll even see in the upcoming weeks, starting our health, wealth, and happiness series, where we'll be sharing interviews with top industry experts in these 3 categories, because at the end of the day, your happiness and your wealth and your health are most important to us at Diversified, and we truly care about you. Very exciting news. We anticipate early next year having a second satellite office in Pennsylvania, looking at Wayne, Pennsylvania. And so that is coming to fruition quickly here. And so more to share on that in the upcoming months. So stay tuned as we are expanding. And besides that, I just want to sincerely thank everyone, as we are honored to have you as clients. We appreciate your willingness to let us in and help you achieve your goals, not just set them. And we're touched immensely that you continually do so and share it with others, and that means the world to us. So with that said, no one wants to hear me talk, I can promise you that. So let's share some quick housekeeping. I'll make some introductions and then we will have fun. at least as much fun about talking about this election and the markets as we can have. So, little housekeeping. The only people you can see are myself, Andrew, the moderator, Mike Horwath, our own chief investment officer, and the lovely and brilliant Susan Olson, who I will get to in a moment with her bio, which is incredibly impressive. Tonight, we're assuming this will go about an hour. We'll try to share this on other forums as well. So we want to keep it educational, impactful, but don't want this to drag on too long for you. As we know, you have nowhere to go. And we will take questions. We'll take them. If you are new to Zoom, which would mean you probably live on Mars, but besides that, if you're new to Zoom, you can ask questions by typing in the little chat box. I will keep them appropriate because otherwise we won't be asking them, but type them there and I will do my best to get to as many questions as possible. And besides that, let's have some fun. So, all right. So we know we have Mike Horwath, our own chief investment officer, who has been sharing a lot of great info both weekly through his weekly market updates and also monthly through educational series and quarterly updates and information. We also have a very special guest tonight, Susan Olson. A little bit about Susan. She's the Vice President of Government Relations at Natixis Investment Manager. They're located in Washington, D.C., where she serves as point person for the firm and helps the firm maintain awareness of regulatory environment, as well as legislative issues and initiatives. From 2005 to 2015, she served as managing regional director at IAG Mid-Atlantic on the national sales team for Natixis Investment Managers in their U.S. distribution department. And prior to joining the firm in 2005, she was vice president and regional manager at AIG Sun America Mutual Fund. She started in the financial services industry with UBS Payne Webber in 95. So I've had the pleasure of hearing her speak, and I think you will all be as impressed as I am. All right, let's have some fun. So, Susan, there's something happening next week, huh? About a week from today.
I'm not counting down the days or anything.
I can't wait. You get a vacation next Wednesday. So before diving into next week's election, as we'll have plenty of time to talk about that tonight, I'd like to take a moment to just discuss where we've been. Can you give us a moment to talk through the government's response to COVID-19 and the fight over additional stimulus, which have been two of the big things in the national media here?
Yes, it's good to get the bad news out of the way. So where we are with Congress and trying to pass a fifth aid package is basically stalled. Friday was basically last week, and Friday for sure was the final hours if they wanted to try and push something through before election. But we're stalled from here. So the timeline goes back to March. And if you can remember with me what it felt like in March when COVID became real for us, and we started to understand the impact it would have to our society, to our jobs, to our health, Congress was trying to wrap their heads around it too. But fortunately, they did band together and they did what they had to do, and they passed 3 bills in 3 weeks in the month of March, one on March 3rd, one on March 18th, and one on March 26th. And those were for about $2.4 trillion, the largest of which was the CARES Act for $2.2 trillion. They followed that up a month later with about $500 million. Most of that money, about $367 billion of that, went to refund what's called the Paycheck Protection Program. You might be familiar with that. That is the program that was created through the CARES Act to give small businesses loans to help keep them afloat, and that if they met certain thresholds, they can get those loans forgiven in the form of grants. Unfortunately, that's where the goodwill has ended. We saw the Democrats come out with their answer to a fifth COVID package the middle of May for $3.4 trillion called the HEROES Act. Well, that price tag was way too big for a Republican Senate. However, it still took the Republicans 2.5 months with their answer, which they answered back with the HELPS Act for $1.1 trillion. So you can tell there are way too many T's in between the 3.4 trillion and a 1.4 trillion. And so the Republicans did try to pass what's called a skinny bill after Labor Day for about 650 billion, but that fell flat. And really, since the middle of September, the Senate Republicans have extricated themselves from all the conversations. We've heard a lot around how House Speaker Nancy Pelosi and Treasury Secretary Steve Mnuchin, who they have been negotiating, and Steve Mnuchin negotiates on behalf of the president, and they've been negotiating. They literally are still doing it today. They talked for an hour yesterday. They talked for an hour today. But even if they were to agree on something to pass after the election, you are still missing the Senate Republicans. And you have about 10 Senate Republicans who aren't going to vote for anything, whether it's Republican bill, the Health Act for 1.1 trillion or 3.4 trillion. They don't want to put any more money on the deficit. Then you have another dozen Republicans, Senate Republicans, who it's going to be very hard to get them to vote for anything over that 1.1 trillion. So it's going to be hard to get over the finish line, although it may happen. However, even post-election, if they were to agree on something, there's still some other things to think about, because when when Congress comes back from their election recess, the number one thing they have to do, even before passing an aid bill, is to pass an appropriations bill. So our budget, the U.S. budget, expires on September 30th, our fiscal year, and the end of our fiscal year, and they passed a continuing resolution to keep our government funded to December the 11th. So in between the middle of November and December the 11th, and we have a week of Thanksgiving in there, don't forget, that they have to either pass a budget or extend the deadline again. The first part they're probably not going to do, and believe me, the second part they will find so many ways to fight about the date and the price of that. So they're going to have to do that, and then so they're stuck in the mud. We also worry about if the Democrats do win the White House and the Senate and keep the House, that they might hold out for a bigger package once they are in power. We also worry about, if Donald Trump is not reelected, those last 2 months that he's in office, will he refuse to sign something, even if the House and the Senate agree on it? Because, he very well could have the argument, hey, I really needed you to pass something, for when I was running for reelection. You didn't do it. I'm not going to help you now. So there's still a lot of obstacles in the way. All of that really negative thing. We do think something's eventually going to pass. We just don't know in what form.
And it sounds like when.
Yeah, I mean, it could even go into next year. And if if they can't, and I'm talking about even if you have a Joe Biden presidency, the Senate, the Republicans keep the Senate, or Joe Biden presidency, or even if they can't get the Republicans on board to pass something, we might find that they have to pass it through what's called reconciliation. And this is a way for the Senate to pass a bill without the necessary 60 votes. So you write reconciliation instructions onto your budget resolution. So any reconciliation instructions have to deal with anything monetary that affects the budget, which clearly, this does. And so those negotiations wouldn't start until the end of January. And even through reconciliation instructions, it probably wouldn't pass until March. I mean, that will be almost a year since they passed anything at all. So that's a problem. The other problem is that the Democrats, if they win the election, are absolutely going to use reconciliation instructions, but they would rather because you only get one set of reconciliation instructions and you only get one bite at the apple. And so they would much rather use those on tax reform or on infrastructure.
Makes sense. Okay. That's really helpful. Thanks for the background there, Susan. Mike, bring us up to speed. So staying on this topic, can you walk us through, market's been on a heck of a year here, and walk us through basically what happened initially with COVID, what's happened since with the government stimulus, and even as of late with the what we've seen and fallen another bill falling flat, we've seen some market reaction. So walk us through that if you don't mind.
Yeah, and Susan's comments regarding government stimulus, they extend to what happened in markets extensively. So if we kind of go back to where we were in January and early February, our outlook on 2020 was much different than the way it turned out. We looked at it as a slow growth but positive growth year. We saw unemployment 3.4, 3.5%, so really strong. Consumer spending was really strong. We really felt good coming into the year about risk assets. And then, as we all know, February and March hit. As Susan said, it was extreme uncertainty, extreme volatility from a market standpoint. We saw days that we had not seen in a long time in markets. I remember, we were in an investment committee meeting at one point, and they shut down markets for 15 minutes. Those stop gaps that they use when market volatility in the U.S. hits that 7% down mark. So the uncertainty, the uncertainty around the economic impact and what's going to happen, the economic shutdown, caused extreme volatility, and didn't only extend to stocks. We saw fixed income really get hit hard from a liquidity standpoint. So what that means was people were flocking out of even bonds, and especially corporate bonds. When there's not somebody else on the other side of the trade to buy what you're trying to sell, the price will keep dropping until somebody is willing to buy it. So what happened is really what Susan has spoken about. From a fiscal standpoint, the government came together and passed over about $2 trillion worth of fiscal stimulus, unemployment benefits, the PPP, things like that, along with the Federal Reserve, who was really the first one to step in. The Federal Reserve dropped interest rates the first time by 0.5%, and then they came in again on a Sunday, I believe it was, that they've really took it to the floor. So interest rates are at the floor. They're very accommodative. They are in the market from a liquidity standpoint, and this is going back to March and really till today, buying fixed income securities to provide liquidity in markets. What that's done is it created some stability. And since then, what we've seen do well has really been the stocks that are more stay-at-home friendly, right? Technology and healthcare have done extremely well. We're sitting here on Zoom. Zoom stock has gone crazy. The big 5, 6, 7 tech firms and consumer services firms or communication services firms have done well. You think Amazon, it's so easy in a normal environment to order from Amazon at home. We're stuck at home. They are doing very, very well. We also see from a technology standpoint, cloud software. So Microsoft reported earnings today, very strong earnings again. And a lot of it's due to cloud software. So what we've seen do well has been mostly technology, healthcare related, more growth oriented. What also happens is when interest rates are low, companies whose future earnings are expected to grow, a lot of their expectations are future earnings. So big technology is a great example. When interest rates are low, they can get financing for those activities. It's very cheap to access credit markets for them. What struggled has, and as you'd expect, it's been travel, it's been entertainment, things like that. You look at the airlines, you look at cruise lines, even financials. So the financials market where they're relying on sometimes interest rate spreads. When interest rates are this low, it's a very difficult environment for them to really drive profit. So the growthier big names like big tech, big healthcare have done well. We've seen more of the value names, so the financials and materials. You think of supply chains and construction, things like that have been halted. They've really been slow to react. Fast forward to today, it really all still holds true. We're starting to see, the economic activity pick up to what the market reacted. So the market's always forward-looking. I saw a lot of people were concerned over how fast the market came back. The reality is the market is forward-looking, and economic data is going to have to catch up. And that's what expectations are based on. Expectation that earnings are going to recover, that unemployment is going to continue to fall. It's what we've seen. It's going to be slow. And any blips on the radar with regards to COVID and a vaccine and kind of treatments to be able to get back to work and get back to we're not going to see 3.5 unemployment anytime soon, but continuously bring the unemployment rate down. So, it's been a wild year, but to Susan's point, government stimulus has been a big part of it. And to her point as well, it's going to be important in the future. The question is, and I wrote it on Monday, it's a matter of when and how much at this point.
It's a great point. And let me tell you, as someone that is in these investment committee meetings and partially runs this company, there's nothing you like least than the market shutting down in the middle of an investment committee meeting. I can promise you that. It's great insight, Mike. Thank you. So, Susan, let's talk about this election. Is it me, or does this feel like the most polarizing, biggest election I can remember in a long time? Or is that more of a recency bias and we say this every 4 years?
We have seen polarization in this country escalate to these levels really since 2000, when during George Bush. There is an interesting study that shows the change of control between the White House and Congress from 1960 to 2000. And in those 40 years, which had 20 elections, control only changed 7 times. From 2000 to 2018, in those 10 elections, control changed 8 times. So what you're seeing is the partisanship reflecting down the ballot card, where people no longer, it's very rare that a person jumps ballots, jumps between columns, the R's and the D's. Typically, you get your vote. People at the front door of the polling station hand you your Republican card, hand you your Democrat card, and tell you how to vote right down the party line. So we have really seen that, and it's that polarization and that type of voting is so important to the down ballot races. Like right now, there's a lot of Republican senators who are in trouble. In fact, there are 12 out of the 23 that are in very tough, tight races. And their best chance for winning is if Donald Trump wins. So people vote down that card, vote down that ballot. That's what we saw in 2016. The Senate, Republicans were not supposed to take the Senate or really even the House, but they did because people voted down those party lines. So yes, if people are finding it very hard to jump parties, doing a mixture between Republicans and Democrats, and yeah, it's really, are you with me? Are you against me? Attitude, which is really sad. But the other part we've seen in that, when I mentioned, I think I said it's really quiet. Did I say that on this one? It's really quiet right now. This week, it's because all the actions already happened and everyone's already voted. By tomorrow, we will probably see, excuse me, that 70 million people have already voted. 70 million people. In fact, as of this weekend, there were more people that had already voted than had voted for Donald Trump in Florida. So 4.7 million people as of this weekend had already voted either mail-in or early voting versus the 4.6 million people that voted for Donald Trump. It is insane. And so people have already really made up their minds. That's why a lot of these, we're probably, I don't know if we'll see any last minute zingers. We might see something, the Trump campaign trying to expand on the Hunter Biden scandal, but that Hunter Biden scandal really kind of flopped for them. They should have done that back in September because, again, people have made up their mind and they're really not interested. And frankly, I know my immediate circle, if they've already voted, they are done with this. They're not even watching politics anymore. So, but yes, your original question, partisanship, yes, most certainly. We are at extremely high levels of partisanship in this country.
Yeah, it seems to be. And let's stay on that mail-in ballot concept because you're right. It's been 60, 70 million votes ahead of time is clearly historic. Does that bode well or better for one party versus the other? And do you think that it leads to a potentially contested election? What's the probability of that happening and we're stuck here in limbo for weeks or months post-election?
I would add one more element to that question, and that is, does all the new voter registrations benefit one party or another? Because I think both with voter registration, we've heard a lot around that about voter registrations are at all-time highs. I think, Austin, Texas, and the county, it's the state capital, that county it sits in, has like 96% of people registered, and that's not uncommon. But I feel like between all the attention around mail-in balloting or mail-in voting and registration, that there's this large assumption that benefits the Democratic Party. And I would challenge that. I think Republicans are benefiting from that as well. Going back to Florida, I believe the number I read was that there are more than 1 million new Republican voters in Florida. And the other place that and then mail-in ballots, yes, they do skew right now towards the Democrats, but I think we've already started to see it. And I think as we get closer to the election, we're going to start seeing that narrow. Republicans are deciding they want to get in on that action as well. And then in-person early voting, it's split. There are just as many Republicans voting in person early as there are Democrats. So but where I think the biggest misconception is too, is that the mail-in balloting and the voter registration is around urban areas. That's where the news comes from, right? Urban areas. But what we're seeing is that rural Americans have really stepped up their registration, and that mail-in balloting can help them as well. If you are from a rural area like I am in Nebraska or have family there, that getting to the voting booth might not be important if you're trying to, do your fall chores to get your farms ready, and it's cold outside. But now you have the option to vote early, and you also now have the option to mail in. So I think this year, we had lots of surprises when it came to voting last year. The shy voter, the undecided voter, missing, the whole demographic that went for Trump. I don't know that those are going to be in play as much this year. I think what's in play is to see who's, maybe it's that rural voter who who's a Trump supporter, but that rarely votes or never votes. And if you've driven through rural areas lately, and my boyfriend and I took a cross-country trip this year, and I was up in earlier in the month, I flew into Green Bay and drove to the Upper Peninsula of Michigan, where I have family. It's littered. It's just everywhere is Trump. So I think that could be, so I think that it benefits both. I think we hear about it more skewed from a Democratic angle, but I think the Republicans are going to benefit from the mail-in voting and the registration. And then there was a third part. Oh, then the contested election. Yeah, it can. The markets are pricing in, and Mike can talk maybe a little more about this, but it seems like the markets are pricing in less of the chances of a contested election. Could it still happen? Of course. How do contested elections work? If there is question on the validity of mail-in ballots, and by the way, there is no historical proof that mail-in ballots it's definitely less than 1% of errors. And most of those are because someone didn't sign it, someone didn't put the postage on it, not like they threw it out because signatures don't match. That happens, but in such like incremental percentage of what that happens. But if an election, so the two states that I think are most important to watch are Florida and Pennsylvania. I think those two states could determine who wins this election. And if either of those states are won or lost by, I would even say within a margin of 2%, that the person who did not win the state will likely challenge. And what a challenge means is that each district is assigned an elector, and that elector is in charge of counting and attributing for all of the ballots, all the in-person, early in-person, mail-in ballots, foreign ballots, military ballots, and they have to go back through and recount them. Now, what happened in Florida 20 years ago was that the state of Florida, the state election system didn't really have a congruent process for each of these electors on how to go about recanvassing. And so they were doing it different, for lack of, just put it simple. And so they couldn't agree on which method worked, which is why eventually they had to send it to the Supreme Court. This time around, states have had plenty of time to figure this out. We've been talking about contested elections for months now. And so hopefully this time around, they will have a better process in place. So even if there is a contested election, they can recanvass quickly and make a determination, because I can tell you that states, especially if you have Democrats in the governor's house or Congress, are going to be loath to send it to the Supreme Court, and the Supreme Court doesn't want it. The Supreme Court does not want to make the decision on who's president of the United States. So to send it to the Supreme Court for most states is going to be an absolute last resort. I know the president talks about sending it to the Supreme Court, but it is a state's decision whether or not to send it to the Supreme Court, not the president.
That's great information. So I guess my vote as a Pennsylvania resident and Mike's actually matters, is what you're saying. So.
Oh my gosh, you guys. Well, and just, you know, and with Florida, just to expand a little bit too on contest. So, and when we're going to know, I think that could be another part of that question. Is it's going to depend on when states can basically start counting their mail-in ballots. So there are some states that let their electors start processing and counting mail-in ballots prior to Election Day. The majority of states do not, and Pennsylvania is one of them. And Wisconsin or you guys just got struck down, you can't accept mail-in ballots after the Election Day? That might have been Wisconsin. If you don't know about it, then it might have been Wisconsin.
It was
so you can accept,
Susan, yeah.
It was Wisconsin. Yours was held up. So yours was held up, but that's right. Yours was held up, but Wisconsin's was shut down. And so Pennsylvania will allow for mail-in ballots to be counted up to 3 days after the election. So by November the 7th, we should know who the winner of Pennsylvania is. So in my opinion, and this is just my opinion, I think we will know the winner of the presidential election by the weekend and not weeks, unless Pennsylvania is won by less than 2%. Then I have a hard time, and it goes to Biden, I have a very hard time seeing Trump not contest that, and even Biden. But Florida allows their electors to start counting beforehand. So there are 4 very important swing states that the president really needs to win in order to get their electoral math to 270. That's Florida, Ohio, North Carolina, Arizona. All 4 of those states allow for counting and processing prior to Election Day. So we will know the winner on that night. So if the president wins Florida, game on. If he wins one or more or all of those states, his path to election is pretty strong, or power is just as strong as Biden's at this point. But opposite, if he loses on Pennsylvania, he has less than a 10% chance to win enough electoral votes without Florida. Then the math becomes very hard. And then if he loses one more of those 3 states, he would have to sweep the Rust Belt. And right now, Michigan is really I think Biden is up by 9 points in that state, which is about a good 7 points higher than what Hillary was, which in my opinion is enough for the margin of error. So anyway, Florida is the state to watch, and then Pennsylvania, because if Biden can win, if he can get Pennsylvania, Michigan, and Wisconsin and keep Minnesota, he has his 270.
That's fascinating. So I guess my vote's up. My vote's up for auction. Just letting everyone know.
Don't say that out loud. You'll get in trouble. Trouble sue Pennsylvania because of that comment.
It's fascinating to me that the 21st century here, I can do everything from my iPhone, I can do everything from my computer, but you still can't vote. I always found that fascinating. But anyways, let's shift focus to the candidates. Mike, I'll start with you here. So let's start with the Democrats. So let's play this out. Biden wins. The Biden-Harris ticket wins. What are you really looking at if that plays out from a investment strategy, from a positioning standpoint? What moves are you looking to make in our models and for our clients' accounts and keeping your eye on?
Yeah, so I won't try to steal too much of Susan's thunder with the actual pushing of the policy, what they're going to focus on if the Democrats do take the White House, and if it's a blue wave. But things that we're focused on, clearly there is going to be a push to raise the corporate tax. There's going to be a push to increase the capital gains tax for income earners over $1 million. So, taxes are going to go up, I think, and that's been very, very transparent. From a corporate standpoint, what does that mean? I think that means that technology stocks are going to get hit a little bit harder because they are, despite what people want to say about reverting back to 2000, the tech bubble, tech companies weren't really making money in 2000. Tech companies today are some of the most profitable companies in the United States and really in the world. So an increase in the corporate tax rate is going to hit the technology sector. I do think infrastructure spending, to Susan's point, there's going to be a push to pass more fiscal stimulus. So more government spending will be pretty beneficial to real estate, construction, materials, some of those more value names. So, we're going to look for more of the value lean more than the growth lean. So when we say that, more of those materials, the real estate, maybe a little less of technology than we've been really leaning towards recently. Most of that really driven by the fact that, higher taxes will probably shave about 10% of earnings off of a reduction in technology companies. And that really leans towards also communication services. So some of these bigger Amazons, things like that. So the big, really FANG stocks are likely going to be the ones to pay the price a little bit, along with the push for regulation on technology, right? Antitrust lawsuits. We see it with Google. I'm pretty sure there's some stuff going on this week with Twitter's Jack Dorsey. There's going to be a continued push to regulate. It was something that Bernie ran heavily on. They want to break up tech companies to an extent. So we expect a lot of that to really hang over from a tax standpoint, from a regulation standpoint. I also think it's important to remember, and it's interesting, and Susan, I think, alluded to it earlier, that markets aren't really reacting much to election data. They're reacting to COVID data. They're reacting to economic data, earnings. Those things are moving markets. I do think a lot of this is priced into markets, and I don't think you have to position extremely differently if the two candidates, despite who's in the White House. I think there's ways that you will lean to, but it's not extremely drastic. It's just, there's certain areas that are going to clearly be winners and certain ones that are going to be clearly losers over time.
Naturally. And I know you've already made some of these adjustments as
Sure.
recently as this week. That's great insight. Thanks, Mike. Susan, let's stay on the Democratic ticket. So what does a Biden-Harris victory mean? I know my Republican clients are petrified of what that means, and we hear a lot of conjecture on taxes and a lot of other freedoms or liberties. What are they actually running on? What actually will get passed? And what should we really be concerned about or not if that ticket wins?
So they are, as Mike mentioned, they are focused on their tax proposal. Now, along with what Mike talked about for the corporates, on the individual side, there is a lot of confusion around what they would do. And then part of the confusion is because both Biden and Harris, frankly, have misspoke based on what their written tax plan proposal is. As I work on tax in DC, and so that's what we have to go on. And I've seen the commercials that say Biden's tax plans are going to raise taxes on 82% of America. Not according to the tax groups that I'm in, not according to a lot of the tax think tanks. The reason is because that he really does want to just raise taxes on people making over $400,000 a year, because he has his fiscal reasons to do that, to pay for his infrastructure plan, to pay for some of the programs he wants to do. However, there's a big moral reason as well. Biden and Harris want to address income inequality in this country. And so if they were to raise taxes on 82% of Americans, that would pretty much shoot that moral reason right in the foot. So they are going to be very hypersensitive to raising taxes of any sort to people making under $400,000 a year. So, they want to take the tax rate for people making more than 400 from 37% back to 39.6%, where it was prior to the Tax Cut and Jobs Act of 2017. They, want to have people who make more than $1 million pay ordinary income tax rates on their capital gains and dividends, which, dividends and capital gains are at either 15 or 20%. So it would essentially double that. So they are talking about that. So when would that happen? It's going to be very interesting when we get into the new year, because, as Mike was talking about what the economies is doing, what the markets are doing, we don't know at this point. We are kind of in wave 3 right now of COVID. What does that mean? Are we going to, and with not getting Congress to pass a COVID bill, what does that mean for the economy? We have been in slow growth, or slow recovery here. Does that stop and stall, which takes us back into a redo of the recession that we saw back in the spring? And if so, Mike can probably speak to this from history. Does raising taxes in the middle of a recession make good fiscal sense, for our country? So they're going to have to be very careful. However, if they choose to do it, the timing is going to be within the first year. I mentioned reconciliations instructions, the instructions you put onto a budget resolution. And I mentioned how they might be forced to do that with the COVID. They do not want to do that, because right from the word go, if they decide to move forward with this tax plan, no matter what, they're going to have to do it through reconciliation instructions. And by the way, this is an assumption that it's a Democratic sweep, that the Democrats have the Senate and the House, because if the Republicans keep the Senate and Biden wins the White House, there is no tax plan. They're not going to get it. Republicans are not writing reconciliation, because it's the Senate that writes these in, because the House can pass on 51%. So it's the Senate that has to write these instructions in. They are not writing reconciliation instructions for tax reform. So this is assuming a Democratic sweep. They have to do it in that first year, because they don't want to wait till the second year, because now it's midterm election time. Does not look good on a politician's resume that they just voted for a tax increase. So that's not going to happen. And they can't wait till year 3, because they might not have all Democratic control in DC. So it's going to be in that year 1. The question is, what's the timing on the economy look like, and how much can they push through? And to your point, I talked about how we have to go based upon what he has written in his tax plan. It is a rare thing for a president's policy once he is I wish I could say he or she, but once he is elected, to have that policy enacted as it was written on the campaign trail. So even though this tax agenda is more progressive than what we have seen from Obama administration, from Hillary Clinton's tax plan, we do think it could be moderated if it were actually enacted.
Okay, so you not to fear of an 80% tax if you make over 400,000 or $1 million.
No, it's taking it back to where it was before the Tax Cut and Jobs Act. And actually, you guys probably know the history. I mean, it's been 39.6% for a long time. It was even a little bit higher during the Bush years. So, and the reason too is, when you raise taxes on, people who are wealthy, it doesn't really cut into their consumption. Whereas when you cut taxes on middle and lower class, now that cuts into consumption. Now you really are using the money they need for day to day, or just small things like going to a movie. Whereas if you're making $400,000, $1 million a year, you're not going to not buy that movie theater ticket. If we could go back to movie theater.
Fair enough. And how about other policies that we should focus on?
Yeah, the other policies. In fact, as Mike started talking about this, about how it's not. Wall Street's actually kind of rooting for Biden at this point, because markets go up and down based upon certainty and uncertainty. Let me just get one point very clear. Markets are not red. Markets are not blue. The markets are green. They want to know what's certain, and they don't like what's not certain. And under President Trump, his policies have been very uncertain. His economic and trade advisors found out what his China policy is, just like we did, through his tweets. and the markets don't like that. So the markets have, react negatively to that. So with Biden, like his China policy would be much more transparent. He would bring our allies back. He would, we think trade under Biden, not that he's going to get weak. We don't think he's going to unwind what the president's already done in China, but it would just be more transparent. We think that's a market positive. We also think that his infrastructure plan is a market positive. He will have it paid for with the tax hikes, and Mike can probably get into more of that. That's definitely out of my lane as far as what industries would benefit. But overall, listening to my economists and strategists, that infrastructure, things like infrastructure in China would be market positives, which would offset some of the hit on S&P 500 earnings.
Got it. No, that's great insight. So let's flip the script here, Mike. Same line of questioning for a Trump Pence ticket here, winning re-election. Where's your focus go?
Yeah, so let's stay on China, because I think I'm glad you brought that up, Susan. China is an interesting one. I would expect that maybe a year ago, most Chinese business people and politicians would probably be pulling for Trump to remain in the White House. As of recently, my conversations have been, a lot of them are leaning towards a preference towards Biden. It's exactly what Susan was talking about, in the sense that, not that Biden will be easy on China. I'm not saying that, but what I'm saying is the Chinese would appreciate it to be more closed door, not on Twitter. And our expectation would be that Biden would be a little bit more friendly to China. And if you recall Q4 of 2018, all of that volatility was driven off this trade dispute between the US and China. Trump has been very clear that he wants to be America first. He wants to punish companies that outsource to China or incentivize companies to bring jobs home, things like that. So our expectation would be that if Biden were to get in, that China relationship would be market positive, as Susan said. It would be beneficial. And while an increase to taxes would certainly hurt S&P 500 earnings, for example, that relationship with China would be market beneficial, and would help offset some of that, along with infrastructure spending. Going over to Trump, we would expect that the Tax Cut and Job Act would obviously stay still. We'd expect corporate tax rates to stay where they are, personal tax rates to stay pretty much where they are. We would probably lean similar to where we were coming out of the pandemic, which would really be to favor U.S. technology still, U.S. healthcare, those bigger companies like that, because they're going to be the key beneficiaries of the corporate tax remaining pretty low. I think we'd also fairly probably lean more U.S. We've been more domestic oriented, where we just have a home country bias. So as it is, with Trump's policies, we tend to prefer big U.S. companies right now. With the pandemic, big quality companies, a lot of cash flow. We'd probably continue to lean more tech heavy. A Biden, election, we would be a little bit more constructive to China. It's something that we see global technology as an opportunity, global middle class that's growing. And if you look at what constitutes technology globally, it's not the developed countries. So, Europe is not heavily armed with a big, quiver of technology firms. Asia is. And when we think that, Asia is poised, especially China, to really come out of this as a strength, with Trump, we think that could be mitigated a little bit with a tougher stance on China. With Biden, we are a little bit more constructive there. But, to answer your question a little bit more directly, with Trump in office, we tend to lean a little bit more towards the U.S., continue to lean a little bit bigger U.S. tech and healthcare, similar to where we've been more recently.
Yeah, that's great. And Susan, I like what you just said before, because it goes in line with, I know what David, Kyle, and myself tell clients, which is really that markets are green. I think they're not red or blue. Historically, you'll see Democratic presidency leads to better stock market historically, but at Diversified, I don't think we even put much credit in that, because there's not enough data out there, and really companies will succeed. So I like that. Markets are green. That's a good takeaway. but let's go back to you, Susan, on now we talked about all the benefits or what Biden would do, good and bad. What do we think another 4 years of Trump Pence looks like from a policy standpoint?
I think to what Mike said, that he will continue the America First policy. He will go for more bilateral trade agreements, and which means that he likes to do country to country, not have trade agreements where you have multiple countries all agreeing to the same terms. He likes mano y mano, and that he would look to possibly put tariffs on the EU and even Japan. In fact, he started talking about that. I think Mike, didn't he start talking before COVID? He was talking about putting tariffs on the EU and Japan. Of course, COVID derailed all of that. But a year ago, he put tariffs on France with wine and cheese and other luxury goods. So he already took that first step. We think he would continue to going down that path and, go to Japan. Let's just hope he doesn't do it on sushi. No, I'm just teasing. But yeah, he would put tariffs on Japan as well. Probably do a phase 2 China agreement. And when it comes to infrastructure, we do think we'd see an infrastructure proposal from him, not as big, probably about half the size of what Biden's is, and probably not focused on some of the clean energy and clean jobs that we will see from Biden, but really address, bridges, roads, and broadband, 5G. We're looking at a price tag from about $1 trillion. Now, I mentioned that Joe Biden will pay for his infrastructure with his tax hikes. How President Trump Pence administration, they're looking, and Republicans in general, they favor private-public partnerships. So they would make vehicles for the public to buy and invest in and try to help fund it. But they still have the public part, and that public part, even if it's half of it, $500 million or $500 billion, they will have to find some kind of revenue raiser, which usually comes in the form of taxes. Because believe me, all the stuff we try to, we have to find ways to pay for it, and it's taxes. So even in a Trump-Biden or Trump-Pence administration, if they want to do infrastructure, we could see them raise a tax or two. Zero idea what that looks like, because one of the challenges of this question, Andrew, is that we don't know what their policies look like. This is the first time a president hasn't put out their policy agenda. The Republicans weren't able to put one out because Trump runs the Republican Party. So it would be just fruitless for them to do that. So actually, we really don't know because he hasn't put it out. So we're just kind of going on assumptions of what we already know. And then the last part I'll mention is healthcare. And so the Affordable Care Act goes in front of the Supreme Court on November the 10th to determine whether or not the minimum mandates are constitutional. If the Supreme Court finds these mandates unconstitutional, it will essentially vacate the Affordable Care Act. That means that immediately you have tens of millions of people who are without health care in the middle of a pandemic. So regardless of the administration, if it is vacated, they will immediately have to come up with a new health care program to put in place of the Affordable Care Act. So we know that President Trump has said many times that they have a plan. If they do, it's the best kept secret in Washington. Nobody has seen this plan. I don't know of advisors working on this plan, but they're going to have to come up with one. So those are the things that they'll have to do. And then, that's really all. We don't know the rest. We don't know where he's going forward with immigration. He certainly isn't going to do anything on climate change. So we really don't know, Andrew.
Right. So some unknowns and some status quo, I guess, is really where we're looking.
That's right. Right.
Okay. And I have a question that came in this line of thinking, which is what the impact of green jobs, assuming Biden wins. It's been painted a job destroyer. Is it such, or is it more of a job creator? If we go,
yeah, I mean, it's creating a lot of jobs. I mean, it's actually, the clean energy jobs in Pennsylvania. I think there are more clean energy jobs in Pennsylvania than there are fossil fuel jobs. So, it can be very much of a job creator. It does put pressure onto the fossil fuel industry, which has been one of the behemoths and one of the, biggest drivers of the economy for a century. But yeah, I mean, it doesn't have to be negative. I mean, I don't think that Biden, again, based upon what they've written, they're not going forth with the Green New Deal. That was something that just had ridiculous price tags on it, and hurdles to pat that you just can't do. But yeah, I mean, I don't think we have to look at it as a negative, and, the environment kind of needs it.
Yeah, it's a good question. Thank you. And I appreciate your insight, Susan. Okay. A couple more questions here. And of course, if anyone has any while listening, feel free to pose them. So you earlier talked, Susan, about the key races in certain states for the path to both a Trump and a Biden presidency. How about in the Senate and Congress, right? I mean, where are the real focus? What's the real interest in dialogues that I know is certainly above what I pay attention to on a daily basis? Where should we really be focusing?
So, as I mentioned, there are, I think, about 12 Senate Republicans who are in very tight contests. The two most vulnerable is in Arizona with Martha McSally. She's running against Mark Kelly, who's Gabby Gifford's husband, and he's a former astronaut. And he has been beating her by around 10 points, over 10 points for several months. That has narrowed. And my friend's daughter actually is her communications person. So I do hear a little bit more insight on that. They're hopeful, but I think they're in trouble. Cory Gardner from Colorado is running against the former governor Hickenlooper, he is very popular. He's also not very popular, but Cory Gardner, he's a first-term senator, not too exciting compared to Hickenlooper. So it looks like chances are he's going to lose that. And Susan Collins from Maine, she's running for her fifth term. She's been 24 years, running for her fifth term. She's a Republican in a Democratic, or used to be purple, but now more of a Democratic state. However, she's one of our most moderate Republican senators. And when I talked about people not crossing ballots, people in Maine would cross ballots for her. However, she got herself in trouble with people of Maine when she voted for the Kavanaugh confirmation. And so there was a lot of, I guess we kind of call it dark money, Democratic PAC money that came in, and they are just funding the bejesus out of the Democratic challenger. Susan Collins is being outspent by about 4-1 up there. So I know Susan, and she's a great lady. So, but she's in trouble. Jody Ernst from Iowa, she's in big trouble. Her best, she kind of has a damned if you do, damned if you don't. She's trying Iowa for the first time. They are literally a toss up. I think one candidate goes for day-to-day up 0.6, not even a full point. And so she sees how the state is pulling away from the president, but she needs the president to win with the down ballot. So she doesn't know what to do up there, but her race isn't looking good. Tillis from North Carolina, from North Carolina. He was really behind with his challenger, Cunningham. Cunningham was above him by like 10 points, but then Cunningham got himself in a little bit of trouble with one of his assistants. So he had a sex scandal. So that has that's helped Tim Tillis. And so he's doing a little better, but his race is sketchy. Montana, Steve Daines is running against the former Governor Bullock. And that's neck and neck, although Steve Daines does have somewhat of an edge. Lindsey Graham, he is fighting for his life. I think that's the one that I could see that one turn. He's running against a very, very young, dynamic man. Lindsey Graham is being outspent by about 3-1. This Senate race in general is absolutely the most expensive. North Carolina 2 weeks ago, they crossed $100 million. I think in the state of Maine, they spent like $200 a person on ads. I mean, it is crazy. Right now, yes, I should have started with this. The Republicans have 53 senators, and the Republicans have 53. The Democrats have 47. They actually have 45, but they have 2 independents that caucus with them. So we call it 47. So in order for the Democrats to take control, they need to either win 3 plus the presidency, or they need to net 4 without the presidency. The reason for the presidency, if you didn't know this, the vice president is the president of the Senate. So when you have 50-50 ties in the Senate, the vice president makes the tie-breaking vote. So that's why net 3 with, net 4 without. Now, the Democrats have 2 races that are competitive. One is Doug Jones of Alabama. He won as a Democrat in Alabama a few years ago when the Republican challenger was very controversial, Judge Roy Moore. So that was kind of a fluke, but he is way behind. He's running against Tubby Tuberman or whatever his name is, the former coach. So yeah, it's football. It's Alabama. He's out of there.
Okay.
So they're going to probably lose that. And then, but Georgia. So you have all those races. So it could come down to a very tight margin. Georgia is the state to watch because both senators are up for election. You have Sonny Perdue, who's up in regular way. So, they rotate senators' election schedule. So, they're 6-year terms, so it goes a third, and a third. So he's up regular way. But then you have special election because Senator Johnny Isakson retired in 2019 because of health. And Kelly Loeffler was appointed by the governor to take his seat. So she's up for special election. Well, in Georgia, you can have several people on the ballot of both parties. And the only way to win in Georgia is if you get more than 50% of the vote. If a candidate does not get 50% of the vote, it goes into a runoff election where the top 2 vote getters go into a special election, a runoff election. And so it's very possible, in fact, it's more likely than not, frankly, that especially Loeffler, there's like 7 people and nobody in that contest has ever pulled above 50. And I don't even think Perdue has pulled above 50 very much. So it's very possible that you have both Georgia senators who go into runoff elections. Those runoff elections aren't scheduled till the first week in January. So if we're at like 49-49 Republicans and Democrats, which is that is not an impossible scenario. We could be on pins and needles waiting for that Georgia runoff election to see which party controls the Senate.
That's fascinating. It makes for great theater, doesn't it? So
it sure does.
So, okay, I have one more question for each of you. I'll start with you, Mike. All right. So give us an outlook for 2021. Give us an economic outlook. Where should we be looking? What are you looking at? What does the election have in store? Where do you see things for the year ahead?
Sure. So, it's clearly a little difficult to predict too much because there's just so much uncertainty. And Susan was perfectly correct. During the entire COVID situation, all you probably heard from my mouth was markets hate uncertainty. They really do. They much prefer to know what to expect, and they will price in what to expect. That's how markets typically work. Going into 2021, we still think we're cautiously optimistic. I think those are probably the best words. Cautiously optimistic. We think it's going to continue to be a slow recovery. Without question, the key is we need to get control of COVID-19 so that businesses, especially the ones that have been beaten down, industries that have been beaten down so much, that they can kind of regain traction, start to generate revenue again, get back on track from an earnings perspective. You see industries like energy just getting destroyed from an earnings standpoint, and there's really not a light at the end of the tunnel yet. And it's not just the U.S., it's Europe. Really Asia has a few, and Australia and New Zealand, those are the countries that have seemingly done very, very well. But we need to get control of the coronavirus in order to really kind of take off and really get back on track. Our expectation, though, is a continued slow recovery. This no matter who's in the White House, we tend to think that earnings by the end of 2021 will be comparable to pre-COVID earnings. We'll see where that lands, but we think it'll be comparable. But in the end, our expectation is for GDP to continue recovering, to see earnings continue recovering, unemployment to continue coming down, a vaccine, and really more than anything, it's a defined timeline for a vaccine will help. I don't think it's necessarily the answer to everything, but it will help. There's just a ton of uncertainty out there, and the election is just part of it. The coronavirus is a big part of it, but we do expect a slow recovery. My recommendation to investors and to just anybody who's looking at the economy is to just take a step back, similar to what we were talking about back in February and March. We will get through it. Things are going to continue to recover. Additional government stimulus will be a big help as well. We do expect to see additional government stimulus that will continue to be helpful. So, in the end, we'll see, but we are very cautiously optimistic. We do expect earnings to continue to recover. We've seen them recover. We've seen GDP slowly recover. We expect economic data to catch up, slowly to where markets have been able to creep up to this year.
Sure, that's great. Great insight, Mike. All right, Susan, you ready for it? I'm going to put you on the spot here. So you don't have to tell me who's going to win next week necessarily, but give us a prediction. Give us a prediction through the election that we may not be expecting, or just something you anticipate comes true here through the next week or days or months to follow.
I go through so many scenarios in my head. I really, truly don't have. I think I said this. I really, truly cannot tell you who's going to win. I had one of my close friends today said, okay, you have $100,000. If you pick the winner, you double it. If you don't, you lose it. And I'm like, I'll keep my 100,000 because I have no idea who's going to win. It's impossible. I did mention, I think that the surprise I think what, will turn the election to Biden is if he can energize the Black vote to come out. They largely stayed home, especially in areas around you, like Detroit, I think even Philly, they stayed home. They just weren't excited about Hillary Clinton. If he can get that, if Hillary Clinton would have had the blackface turn out like Obama did, she would have won. So you have that, and then the youth vote too, if he can get the youth vote. But on the other hand, I mentioned the rural vote. I think that could be a missed demographic from the pollsters, that we have a larger rural. Now, I know a lot of these rural areas, like where I'm from, Nebraska, South Dakota, they're already going to vote. That doesn't really matter, but it does matter in Iowa. It does matter in Ohio. It does matter in Wisconsin. I think Wisconsin could very well go Trump again. I think Iowa will. I think Ohio will. I think Florida could go Biden. But I do think that Biden can pick up Pennsylvania, that he can pick up Michigan. So it is, honestly, and I don't want to end on a negative note, but one thing we do worry about is, based upon the results, how you brought it up with your first question, Andrew, the partisanship. What's the reaction from the losing side? We hear about Trump supporters, if it looks like at first Trump wins and then results come in we are just as worried about the Democratic side. The polls tell us that, people who say they're voting for Trump, 75% of them are voting for Trump. People who say they're voting for Biden, about 60% of them say it's a vote against Trump. And that was as low as 75. So the passion behind the disdain for the president on the left is so enormous that I've had friends and family say, like my boyfriend was going to go to see his dad in San Diego. And I said, you have to be back before election day. because we are worried about that as well. But, you know, going past that, I don't know. I mean, this is the craziest. You know, the fact that everyone's voted early, it's just impossible to know. I know that I'll be up all night on November the 3rd and until we find out what the outcome of this election is. But, you know, we hope for the best, and that once we can get this election behind us, we can start to unite as a country. That we've got to get over this. We can't let this get worse. This partisanship get worse. It's already bad enough, and it's hurting us globally.
I agree 100%. Any final words, Mike or Susan, before I say my farewell?
Yes, vote, 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 vote. You in Pennsylvania need to vote. Your vote, I mean, I talked to do a lot of these, and I know like in states like, you know, a California or a Nebraska, where you know which way the main vote's going to go, but your vote matters. And I know something else too, because, you know, anyway, that's a whole other topic, but you know, you still have the down ballot, and Pennsylvania, you all are pretty good at splitting your districts and Senate seats up between Republicans and Democrats. And that's really important in Washington, D.C., that we have, you know, that we have a mix of representatives from both parties within a state. So keep it up, Pennsylvania.
All right, we'll do our best. Mike, any final thoughts?
No, just, you know, as always, stay calm, stay patient. If you have questions, you know where to get us. You know, I think everybody's done a great job, and staying calm. Our clients have done a great job, and our planners. To Andrew, kudos to you for all your good work. And but don't hesitate to reach out with any questions. As always, you recall what happened on election night 2016. Market futures were down 750 points. They ended the next day up 250.
It's a great reminder.
Just one day.
Yeah.
You know, relax. It's okay. In the end, you know, I ended my last piece like this. You know, in the end, corporate earnings, cash flow, those are going to drive markets, not who wins on election night necessarily. So just stay calm, stay diversified, and we'll make sure you're positioned correctly.
No, I think there's some great messages. And Susan, if you need a place to put that $100,000, I have some.
My friend needs to give me a check. And Andrew, you can make a second career out of moderating. You did an excellent job.
Thank you, Susan. I appreciate it. And thank you, Mike. So, and thank you to our clients for your loyalty, your trust, your time tonight. Susan, we really appreciate it. What a lovely time, and man, you are insightful. I know these are the type of resources we have at Diversified that we lean on both publicly and behind the scenes. And we've been a benefit to us to continually read what you put out, and it's helped frame some of our decisions here. So thank you very much.
Yeah, and that piece that Chris sent you today, Andrew, is client approved.
Oh, great. It was an excellent two-pager, which you shared on tonight. I was actually going to pick it apart, but you hit on most of the things. But thank you for your time, Susan, and for all that you do. Very insightful. Mike, thank you for all that you do for our clients, for us at Diversified. Two of the smartest people I've ever met on this call tonight, and I'm not talking about myself. I can promise you that. So with that, I will echo Susan and Mike's sentiment, which is get out and vote. Let's unite as a country. I think that's the most important thing here. It is very polarizing. We will get through this. We will survive as a nation, and I'm excited to see what happens and this play out. So thank you, everyone. Thank you, Mike. Thank you.
Thank
Susan.
you.
And have a wonderful evening.